What is going on, YouTube Nation? This is Darth Dividend. If you guys are new to my YouTube channel, make sure you subscribe and hit the notification bell so you don't miss future videos. My head is spinning in circles just getting ready for an exam, and I needed to take a break. So this will be a good stress reliever making this video for you guys. I mean, this exam is going to be crazy. But I found 3 high-yield dividend stocks to buy right now. They're less than $20. They're cheap. There's a huge dip. And these are high-yield stocks. Some of them are very popular. One of them I mentioned before, but these 3 are pretty attractive right now. So let's check these out right now. That first stock is Riverview Bancorp. It's at one point during the pandemic, it hit a huge nosedive. What was the lowest I saw? 446. It has a 3.05% dividend yield, a PE ratio of 10.23. And at one point, it was actually doing pretty well against the S&P. And then it just took a huge nosedive. And that dip is there. It's taking a while to recover. It's pretty stagnant. I'll just show you a quick introduction on these guys. So this is basically a bank that has locations in Washington and Oregon right now. So it's a little small, but these guys distribute dividends and they're very attractive. Look at this. 2017, 2 cents. 2018, 3 cents. 2019, 4 cents. 2020, 5 cents. It's almost getting to 6 cents. This is a bank. Again, now this is not for financial advice. This is for entertainment purposes only. Disclaimer in the description. But, if you're a day trader, I mean, this is down. This is something you can buy and you can sell. This is slowly increasing its dividend. There's a huge dip. It's $7.21. These guys have slowly increased their dividend. They're cheap. This is one that I may look at a little bit. I'm just keeping an eye on it, a close eye. It's just so cheap. It's $7.21, and it gives off a quarterly dividend that has slowly increased over time. That's one thing to look at. PE ratio 10.3. Just keep that one in mind. The symbol is RVSB. Let's jump to the next dividend stock. I have done numerous videos on this one. Arbor Realty Trust. This is this is probably the best mortgage-backed real estate investment trust out there. Its revenue has increased, as I showed you before in previous videos. It's actually beaten the S&P in the past 5 years. It has increased its dividend over time, which I'll show you its dividend history. Its dividend yield is 7.31%. Its year range is 1106 to 1949, and it's still beating the S&P. It's going up. The S&P is going down. I will show you its revenue real quick to a lot of you guys that are new. Now, the thing is with this real estate investment trust, mortgage-backed rates are you got to be careful with these mortgage-backed rates because financially they're not the best and they have decreased their dividend over time. I'm going to show you how much revenue these guys have generated and then their dividend history, which makes them an amazing mortgage-backed real estate investment trust. I mean, it's the whole package. It's crazy. This is what's crazy about this mortgage-backed real estate investment trust. This is in millions of US dollars. 2014 it was 141, 2015 it was 142, 2016 213, 2017 346, 2018 484, 2019 535, 2020 603. So it has increased its revenue even during the pandemic. And I can understand certain businesses playing the pandemic card. This is why we didn't do well. But look at this. These guys have significantly done well. And I'm going to show you their dividend history. Got 16 cents, 18 cents, 19 cents, 21, 25. It's like they gave a special dividend right here at 15 cents, 27. And now it's 35 cents and it's $19.15. It's less than $20. It has a dividend yield of 7.37%. The annual dividend is $1.40. I have 100 shares of these guys, more than 100 right now, and I can't say no to this. And this is one of my top dividend stocks to buy that's less than $20. No doubt. Absolutely amazing. I am long in this one. I absolutely love this one. I'm always tempted to buy more shares just to let that compound interest kick in. But I have enough shares that it's pretty much going to buy me a share each quarter now. So that's one of my dividend investing strategies. Have enough shares so that it can buy a new share each quarter so I can generate dividend income and then have dividend increases over time. So it's like I'm getting myself my own raise. Let me jump to the final dividend stock. And remember, I'm going to do a bonus stock after this too. So here's one, Sabra Healthcare Real Estate Investment Trust. You guys have been asking me about this one. Has an 8.17% dividend yield. It really did take a nosedive when the pandemic hit. Its year range is 1286 to 1902. At one point, 2017, it was actually beating the S&P, and then it had a little bit of a decrease in price per share. But let's check these guys out. So on their website, our knowledge and entrepreneurial spirit make them uniquely positioned in our dynamic industry. We have size, know-how, strong balance sheet, and passion to deliver long-term value to our shareholders while aligning ourselves with operators who deliver a high quality of care. Let's check out their strategy. As patient needs and reimbursement structures evolve, it is important for the operators to stay flexible. It is equally important for facilities to seamlessly accommodate changes in care. As former operators, we know how to identify which properties are poised to thrive. We focus on working with operators who know their markets, deliver a high standard of care, and can adjust the changing needs of patients. We are disciplined investors with an eye of identifying unique opportunities while maintaining a strong and flexible capital structure that allows us to execute our growth strategy through all market cycles. They're poised for continuous growth. Let's check these guys out. They have 423 properties, senior housings, leased and managed, skilled nursing, transitional care, and specialty hospitals and other. So this is what makes things interesting. I have emphasized healthcare real estate investment trust. You guys wanted me to do a video on these guys. These guys are definitely on my radar, but there's one thing that in particular that you need to keep an eye on, but there's still a hot real estate investment trust to buy. Let's check this out. What makes these guys very attractive is they were 45 cents and they're 30 cents. So they have an 8.24% dividend yield. They're $14.68. They've decreased their dividend, but if I see a dividend increase, it's going to be on my radar. I want to see a dividend increase in these guys, and that's still worth it because the dip is right there. So this is one to keep on your radar. So SBRA, RVSB, and Arbor Realty Trust, ABR. I'm going to show you two more dividend stocks just to keep an eye on that are less than $20 right now. Huntington Bank shares is sitting at $16. It has a 3.75% dividend yield. I have emphasized these guys in the past. I do own these guys and I'm long in them. So they're slowly trying to increase. They were right in line with the S&P, and then they took a huge nosedive during the pandemic. Now I'm going to jump to their dividend history. So this is what I like about bank stocks. They usually increase their dividends. Right now it's 11 cents, 14 cents, 15 cents. Right now it has a dividend yield of 3.77% and a PE ratio of 11.27 and an annualized dividend of 60 cents. And I have emphasized to you guys before that their revenue is phenomenal. And I'm going to jump to the next dividend stock. I want you to keep an eye on this one, ACRE, Ares Commercial Real Estate Corp. This is a mortgage-backed real estate investment trust with an 8.65% dividend yield. I'm going to jump to their revenue real quick, and then I'll show you their dividend history. So these guys started to make a comeback, and then the pandemic hit. So they were at 43.70, 55.28, and then 61.15. They went down to 50, but they're still an attractive dividend stock, which I'll show you their dividend history. And what makes these guys as a mortgage-backed real estate investment trust very attractive, and I actually did add this to my M1 Finance dividend portfolios because I saved the best for last, it has increased its dividend over time, and its revenue has been pretty consistent. So I know it's 9.14%, so I need to be careful and say if it's yield trap, but this one I may or may not be long on, but I mean, the dip is there. It's less than $20, and it has increased its dividend. Its revenue is pretty consistent. So I'm going to keep on buying some shares. If I don't like what I see, maybe I'll just sell it in my M1 Finance dividend portfolio. But I like the trends. I like the increasing dividends. And let me know what you think of this video. If you are new to this channel, make sure you subscribe and hit the notification bell so you don't miss future videos. This is Darth Dividend. You guys have a good one. I'm going to try to post a quick one on Sunday. I know my head is like spinning in circles, preparing for this exam. And I know it's even in a few days, but I'm preparing for a reason. So you always got to prepare. You guys take care and have a good one.